we begin with all eyes on Jerome Powell. So we have a really big meeting this week. You've probably heard about Jackson Hole. That's going to get kicked off 2 days from now. It's going to get kicked off on the 24th of August. And many, many people are going to be watching this in the economics world. This is something that we have pretty much every year. It's late August, and that means that the central bankers around the world are heading to Jackson Hole, Wyoming, actually at the Jackson Lake Lodge. The Fed has actually been meeting there now since 1982. They began hosting this. Actually, the Kansas City Fed began hosting this way back in 1978. They moved to Jackson Hole in 1982. And really, it's a pretty boring, beautiful place, beautiful backdrop, but it's really just kind of a boring meeting. A lot of world-renowned economists get together. They share their latest research papers. And then central bankers from around the world usually give speeches on their outlook for policy. So it's kind of a annual get-together, but focused mainly upon Jerome Powell this time, although Christine Lagarde will also be speaking. She is the head of the ECB, so she'll also be speaking on Friday. But Friday is the day that people are going to be watching, specifically Friday morning at 10:05 a.m. Eastern Time. That's going to be about 9 o'clock Central, just about 30 minutes after the market opens. Jerome Powell will be speaking, and many people are wondering what he's going to have to say. We suspect that Mr. Powell is going to kind of toe the line that he has, the way that he has in weeks past. Now, you may recall at last year's Jackson Hole speech, it was really a shot across the bow because Jerome Powell there made it very clear that rates were going higher. And when you look at what happened right in the wake of the Jackson Hole speech last year, the stock market had rebounded right before it, and then it just sank on his speech. Well, he needed to display extreme hawkishness in that environment where inflation was, near its highs of 9%, 8 or 9% or so. So we're in a different world now. A year later, the Fed, of course, raised rates to that 5.25, 5.5 range. And so now the Fed target rate is the highest it's been in 2 decades. You have to go back to 2001 to see this current Fed rate. And when we look at yields, for example, the 10-year yield hit a 15-year high over the last little bit, over the last several days. It's sitting at about 4.34%. And so obviously Jerome Powell may not really want to see that rate soar. He doesn't want to really add fuel to the flames. We've already had a very nice rally in bond yields as the bond market has fallen further. Bond prices falling, of course, whenever rates go up, bond prices fall, vice versa. And so, we're looking for, I suspect Jerome Powell is going to really try to toe the line between outright hawkishness and outright dovishness. I suspect that he realizes that everyone's going to be listening to this speech, and many are going to be looking for clues. And so we are watching for how he's going to reorient, the investment community. We're going to be watching for that. Now, there have been a few economic data points that have come in that suggest that Jerome Powell may not be too terribly hawkish. We did get some data today from, let's see here, let's just pull this over. We'll take a look. U.S. existing home sales dropped 2.2% from a month earlier to a seasonally adjusted annualized rate of 4.07 million units in July 2023, the lowest level since January. However, when you go out and you really look at this, this figure, you'll see we're not only are we the lowest in January. If you go back before that, you'd have to go all the way back to the, Great Recession, 2007, 2008. So the numbers have certainly cooled off on existing home sales. You've certainly seen a pickup, I would say, of new sales, new home sales, largely due to the fact that they're offering a lot of incentives for new build outs. So, but anyway, so you do have that. You have had a lot of robust job growth. That's kept consumers spending, and that is kind of a complication for the Fed as they're trying to bring things down. We don't suspect that the rate hikes so far are going to be able to bring down some insurance costs or gasoline costs. I mean, when you look at car insurance and you look at health insurance costs, these are, these have been a problem. But even though health insurance costs have come down lately, we suspect that we're going to see a rise in those prices. That's a lot having to do with following United Health, which is the main healthcare stock that we follow, that we own. I'm suspecting that health insurance costs are going to rise. It has a lot to do with what the BLS, the Bureau of Labor Statistics, is going to readjust how it calculates those prices. That recalibration is going to have an impact, we think, on health insurance costs. So those may start rising back in the index, but also gasoline, of course, rising because of rising oil prices. So there is some pressure. And so Powell's kind of walking that tightrope. Now, remember, when rates were low, when rates were down near zero, and they were there for a long time, people became very used to it. They just simply became used to that. But there was also the concern that why are interest rates so low for so long? And the thought was, well, because the economy is anemic and they need low rates, right? Well, now we have rates that have been raised. Rates are sitting at around 5% or so, 5.5%. Look at mortgage rates; they're above 7% this morning. 30-year fixed mortgages. And now that rates are higher, people think it's bad now. So it was bad whenever rates were low, right? Bad whenever rates were low, near zero. The idea was, well, the only reason they're low is because of an anemic economy. And then when the rates are when the rates go up, they say, well, they can't go up; they got to go back down, right? So in other words, the idea is that kind of a damned if you do, damned if you don't kind of situation that the Fed finds itself in. Everybody wants low rates until they raise, and when they raise them, there's a problem. And so same thing with gas prices, same thing with taxes, same things with everything else. Americans want low everything. They want cheap gas prices. They want cheap interest rates. They want, cheap imports. They want cheap, just go down the list. Everybody wants that, and when those don't go their way, people tend to complain. That's just kind of human nature, I guess. But anyway, but the thing that Jerome Powell really has to keep in mind is that lag effect that we've talked about numerous times. The Fed does not work. It is not working in a vacuum. When it changes policy, it takes a minute for that to flow through the broader economy. And the lag effect on their policies can greatly determine the timing of when they enact that policy. Now, right now, if you look at the futures market, there's only about a 10% chance of a hike at the upcoming meeting in September. So, and if you look at the futures market, you'll see that they're pricing in the first cut sometime in Q2 of 2024. That we suspect that's going to come much earlier because of that lag effect. And so anyway, we'll be watching this. Watch out on Friday morning for the market to move. Now, there is a big case to be made, and I believe this is what very likely could happen, is that we could see a near-term peak in the dollar and also in rates, interest rates, leading up to his speech, and that his speech may cause it, because we often go back and you look and you see how these Jackson Hole speeches impact the economy. They often really have a bigger impact than people realize. So we could see on Friday that there could be a reversal here of this bullish dollar, these bullish rates that are rising. He may just say the right thing, that causes those to tamp down a little bit, to tame those a little bit here. Not saying they'll completely go down and not come back up again, just saying that he may pop the rising bubble that we see in the dollar and rates somewhat through his language. So we'll be watching for that. I don't suspect that he wants to overheat it more than necessary. So those are our thoughts here on the upcoming Jackson Hole meeting. Coming up beginning Thursday, we'll continue into Friday and then into Saturday.